Let's take it up from there. We'll still be talking markets on the closing of performance today. Well, the market is down 0.07%. And joining me via phone is an investment banker and a stockbroker who's also going to talk more about this. Is Mr. Tajuddin Olayinka. Good afternoon, Mr. Olayinka. How are you today?
I'm good, Tolu. Good afternoon.
Yes, we've been discussing the market even before we came to the closing figures for today, and the market is down 0.07%. I would like your reaction to this.
Okay, Tolu, like I mentioned the other time, market is an unusual state of, prolonged pricing of securities due to, the situation we have found ourselves, especially with rising inflation, unstable or unpredictable, macroeconomic environment. So market is yet to really settle at a particular price. Okay, what price do I pay for this? What price do I sell this? Most investors are in such that in that waiting decision. Do I wait further or do I buy now? So it's not clear, and this is affecting, this bearish sentiment is affecting both fixed income and equity markets. In the fixed income market, you even have more of activities in the primary issue market, but at the secondary market level, it's nothing to write about at all. And so that same thing is happening to the equity market. Once markets cannot have a grip of what the appropriate pricing should be because of unstable movement in macro variables, they tend not to actually be sure of what price to buy or what price to sell. So it's a more customary reaction generally in both markets. And until market comes to to a more stable state, or what I call equilibrium, then we can begin to see a better market. For now, the bearish sentiment still persists.
Interesting one. But what are your projections if you look out? Because like I was speaking to Osie, my guest earlier, we're talking about domestic investors taking charge of the market. Is that a positive one in your thoughts?
It can't be completely positive. It's only positive to the extent that it helps market to have some semblance of stability. I mean, you don't have the kind of volatility you used to have when foreign investors, had domination over the market. But now that we don't have much of them around, we tend to see a more stable and cautionary market, both in the short term and of course in the long term you have a better market. But in the short term we still have that of cautionary market because investors are not sure of what price to buy or what price to sell because inflation rate is largely unstable. In fact, macroeconomic environment is largely unstable. And so yes, I agree with you that the domestic investors have actually helped the market, but it's not the best way to go because you need those foreign portfolio investors to also bring in liquidity, support the market, and in the process also support the foreign exchange market. And that is the best way to go. Of course, you need a stronger domestic participation so that from time to time you have a capacity to buy out those foreign portfolio investors whenever they try to leave. So it's a win-win situation if you have the domestic players dominating the market and at least actually shaping the direction of the market at this time. It's a good development for the market, so to say.
All right, I must thank you so much for your time. Do enjoy the rest of your day. And I'm going to continue. My colleague, as usual, is in the studio already. Effiong Ekop, I want to take it up from the fact that we need that hot money to come into the country, no matter how much the domestic investors play. Do you agree to that?
Generally, hot money is not good for the economy. So, as it is, they should wait. We don't want any hot money.
You sure? At this time, go ahead.
Right now, investors are facing fatigue very seriously. There's fatigue, in the investment environment. And economic indices have frightened fund managers very seriously. Look at our inflation level at almost 20%. And then the exchange rates, how poor it is. In the official window, you have about 420.25 and more than 600, below down the parallel market. And you talk of many other things. As I said, incentives to play in the markets have appeared to dry up. And so investors are reacting to this. So we see a level of holding back funds and even withdrawing from the one that already stays in the market. Look at the volume that we've traded today. Very, very ridiculously low. 122 million units, valued at 1.3 billion naira. You can imagine, very, very low. That is to say, majority of investors, they just want to wait and see what will happen, before they. But those who want to play in the futuristic market, they seem to have a very good time now to buy these cheap stocks. But the issue has always been investable funds. What inflation has done to income, do you understand? That is what we, because except you are able to meet up with your current expenses, you cannot go do meaningful investments. If you do it, chances are that very short time you go touch the investment and you will crash.
Yeah.
So that's the problem that we are facing. But anyway, big companies and big fund firms, they are, but we are not seeing them coming big as we had expected.
All right, then. Thank you so much. If you can get up and do enjoy the rest of your day.
Thank you, Tulu.